All right, welcome back, everybody, to the thrilling conclusion, I guess, of our three-part ERISA webinars. Last week, we talked about summary plan descriptions and the requirements of those. Before that, we talked a little bit about the history of ERISA and plan documents and who's subject to ERISA and Studebakers. So now we are nearing the end, and today is probably going to be a little bit shorter than the 20 minutes that I went the last couple weeks, but that's okay. We still have a good chunk of material to get through, and without further ado, we're going to start right here with the summary of material modifications, or SMMs. We talked again last week about SPDs, again, summary plan descriptions, and SMMs are basically updates to your SPD. So if you make a change in a carrier, you would issue an SMM saying we're no longer with Blue Cross Blue Shield for health. We are now with Aetna or Medica or whatever you want, whatever the new provider is. Same thing would be if you made changes to eligibility requirements, or if you made changes to any of the other plan rules, you would have to issue an SMM for that update, for that modification. They're provided in the same manner as SPDs are, and if you remember what those were, by hand, by mail, electronically if the employee fits the exception, or electronically if the employee opts in. It's never wrong to mail it, and it's never wrong to hand it out to them, but it might be kind of a pain in the rear to do that. You have to furnish them within 210 days of the end of the plan years. That's 7 months essentially. So if you're a calendar year plan and your calendar year ends December 31st, you would have 210 days from that, which would be the end of July roughly, to produce the summary of material modification to all your new employees. And that's quite a bit of chunk of time to do that in. The only caveat to that is that if you make a reduction in your services, so that, let's say, hey, in our wrap summary plan description, we offer health vision benefits, we're no longer offering vision benefits, then you would have to give them notice within 60 days of the date of the adoption of the reduction. So if you made the reduction on, say May 1st, you would have until the end of June to get that SMM out. Generally, though, I don't like SMMs. They're actually really simple and easy to do, but we talked about you having to hand out SPDs during open enrollment and to new hires. And so your new hires are going to have an SPD with the correct information in it. So you might as well just do a new SPD because you're going to need it anyways. And the update of an SPD is actually pretty simple. It's pretty much as simple as an SMM. And then you just hand it out at open enrollment, or you have a plan for how you get those out, and you don't have to worry about the SMM. That's my 2 cents. Moving on from SMMs, this is just some of the technical requirements you'll see about SPDs and SBCs. We didn't talk a lot about SBCs, summary, what does it stand for? Summary benefit coverage, I think it stands for. Those are usually handled by the insurance company. In fact, I've never seen an employer have to create one of those, summary of benefits and coverage. I've never seen an employer have to create one of those. We can if you want to. I've got the templates for it. But when you get Blue Cross Blue Shield, they hand out a form with columns that gives examples of different levels of coverage and copays and deductibles and deductions and whatnot. It's usually blue and white, and it's usually landscape. And it'll say, if you go with this plan and you get an appendectomy, this is what you might be, charged for. If you go with this plan and you get an appendectomy, this is what you would be charged for. Just make sure that your insurance company is doing it. I've never seen one not do it. If you're self-insured, usually your TPA will handle that. If you're self-insured and you don't have a TPA, you probably will not be listening to me today because you have an internal legal department that would take care of that for you and you wouldn't even have to worry about it. So moving on from SPD land, we're going to talk about our last ERISA form, and that is 5500. And the 5500 is a form that you get to file with the DOL. The federal government gets that form to make sure that employee benefit plans are and have been operated and managed in accordance to certain federal standards, which are spelled out in the laws and regulations. And it's essentially a way for the DOL to check up on plans every year and to make sure that the Studebaker thing doesn't happen where the plan assets are being misused and the employees are end up hanging or left in the lurch, if you will. On the health and welfare side, it's not as big a deal, especially if you're fully insured. It's quite honestly just an exercise of filling out paperwork because you're not holding any plan assets. There is no money for you to misspend or misallocate. It becomes more of an issue if you have a self-funded plan and you have a separate trust set up for the payment of medical expenses that is not, it does not come out of your general assets or your general operating account. But you still get the pleasure of doing it thanks to the DOL and the IRS. It's quite a simple process, I guess. You file it online. You can even look up online whether or not one's been filed or not for your company in the past, or you can look up other companies if you're really curious or not able to sleep at night and just want to read 5500 to fall asleep. You absolutely can do that. Quite honestly, I just do a Google search for DOL 5500 filing, and it's the first hit that pops up, and you can just double check to see what's been filed and what hasn't been filed. It is due the last day of the 7th month after the plan year ends. So again, using a calendar year example, because I suck at math, your calendar year ends 12/31. So the last day of the 7th month is July 31st. So that's pretty easy to figure out. A lot of people have calendar year plans. If not, the math actually is simple even for someone like me to figure out. So first bullet here, I thought it says unless exempted, and I think we're going to talk about exemptions right here. And my slides are slightly out of order, so I'm going to go back in a sec to that previous one. So exemption, who is exempt from 5500s? So small plans are exempt. So to be considered a small plan, you have to have less than 100 covered participants on the first day of the plan year. So again, using the calendar year example, January 1st to December 31st, you do a census or count your participants on Jan 1, and you say, I either have 100 or more participants or I do not. If you have 100 or more participants, you get the benefit of having to file a 5500 for the DOL. If you have less than 100 covered participants at the beginning of the plan year, you do not have to file a 5500. And that doesn't matter if, let's say, you're at 99 on Jan 1 and all of a sudden 50 employees say, you know what, that sounds great, I want this health insurance, and you're up to 149. If that happens on January 2nd, you still don't have to file a 5500. It's a snapshot in time. They look at January 1st, the first day of your plan year, whatever that might be, and they say, do you have 100 participants? Yes or no? And that's it. We don't look again until next year. You want to make sure that you know how to count who's covered under the plan so that you can accurately determine whether or not you have an exemption, but it's participants, so people enrolled in the plan, period. It includes those that might be on COBRA. So even if they're not current employees, there's somebody that was terminated and they're still on the plan under COBRA, they would still count. Retirees, if you have retirees covered in a plan, would also count. But participants does not include dependents. It does not include covered spouses and children. So covered spouses are considered dependents, even though they're not dependents for the terms of your tax return. Employees essentially, and former employees on COBRA, and former employees that are retired that are still participants under the plan are how we count participants for the Form 5500. We're going to talk about what happens if you don't file. Let me just look up. Yeah, we're talking about penalties. Let's do all penalties here. Just 5,500 penalties are pretty severe, and in fact, we're gonna handle all probably in this slide. 5,500 penalties. I believe it's like it used to be $2,100 a day. It's up in the last couple of years. It's tied to inflation now, and it'll probably go up even more next year. But right now, it's $2,586 per day for not filing your Form 5500. That is a lot of money, $2,586 per day. So, multiply that by 365 and you get a ridiculously large number. There are other penalties that come for not handing out forms. If you don't hand out an SPD, you can get $1,000 from HHS for not doing that. On top of that, the IRS can issue a $100 fine per employee per day. The DOL has civil and criminal penalties. Criminal penalties don't come up a lot. You probably have to be more like the Studebaker scenario, where you're intentionally misusing plan funds in order to get criminal penalties, but those can include up to 10 years in jail, prison, I guess, federal prison. There's no federal jail. And civil penalties, which again are more fines and more penalties on the monetary side, all of which is not fun. In addition to the 5500s and the SPDs, we'll talk about just some other things that you have to disclose under ERISA. If you have to file an 5500, you get to file an SAR, Summary Annual Report, which is similar to an SPD is to the plan document. So if we're doing SAT prep or ACT prep, it'd be plan document is to summary plan description, as Form 5500 is to summary annual report. The SAR is just a brief version of the Form 5500 that's supposed to be more digestible and understandable, and it kind of is, but it's still a lot of mumbo jumbo in there. And there's a whole bunch of other notices you'll see here on this page that you will have to disclose or provide upon request. A lot of these I bake into the summary plan description wrap document that I've produced, so we don't have to worry about disclosing them separately. Some of these may or may not apply depending on your plan. So if you don't have a self-funded plan where you keep money in a trust agreement's not going to apply. So how do you keep up with all this nonsense, quite honestly? There's a lot of numbers I threw at you in terms of fines and penalties. There's a lot of requirements in terms of what needs to be distributed, how it needs to be distributed, when it needs to be distributed, who needs to get a copy of all those forms and all those documents. So we have a solution called ERISA Complete. It's similar, for those of you who are current clients through Ask, it's simply the same ticketing system. You get to ask us questions about ERISA. You get to ask us questions about ERISA compliance for health and welfare stuff. We help you with your SPD wrap documents. We'll help you with a POP document if you don't have one. We've got a list of all those notices, SPCs, SMMs, SARs, to whatever fancy acronym you can come up with. I can probably find a form that matches it. It's covered by a $5 million guarantee through our insurance coverage. And the pricing is $140 a month flat fee if you just want access to questions and access to us producing wrap documents for you and pop documents. It goes up to $220 a month if you want us to also file the Form 5500. And that does us for ERISA. So I will not see you here next week, and I will not get to learn what's going on next week because I won't be here. But we'll have something fun in store for next week. I'm sure Dan will send out an announcement for what it is if we haven't already. I think you might be getting Michael to present next week as well. So if you have any questions, I don't see any in the chat. Dan, you can let me know if I'm missing any. But if not, we'll be done a couple minutes early and you guys can go on and enjoy your day. Thanks much.